All right, let's try. Let's try it now. Um, okay, here we go. We are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is another episode of episode 261 of Trade with Travis. Uh, thank you for the people that are watching on TradingView. Thank you for the people that are watching on YouTube. Obviously, this is Trade with Travis, Carter Cow Capital, and Expert Advisor Reviews. Thanks for being able to pop in. I really do appreciate everyone for being able to watch on this Monday episode. Let's go ahead and get through the disclaimer first. And also, please let me know if my sound is good as we get everything else situated. I do need to know if my sound is good because I end up changing some configuration stuff inside my office. So I want to know if I didn't mess up anything. But here we go. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, as we go through, I'm going to put myself onto the screen, and we're going to end up talking about what's happening with the overall charts and being able to get everything else situated from there. What's going on, everybody? Hopefully, everybody's doing very well. If you're not familiar who I am, my name is Travis. I've been trading for the last 7 years at this particular point. I'm trying to make sure my camera is right. I see that it's tilting a little bit. Um, I've been trading for the last 7 years professionally. Trade with my own money, trade prop firm money, or trade with prop firms. Do automated systems, teach education, and obviously end up talking through TradingView as well as we end up getting everything else situated. CMG, what's going on? Hope everything is going well with you. Um, Jeez, I fix that camera. I get everything else situated. Hope everybody's doing very well. Like I ended up saying before, I'm gonna end up kind of breezing through some of this stuff. Today's Monday. Today's the second to last day of the overall trade month. So I do not expect a lot of stuff to be able to happen today when it comes down to trading. Um, but it's worth to be able to take a look at. My camera is not in the greatest position, but can I sink down on my chair? Nah, I can't sink down on my chair. There we go. Simple question. CMG, how's graduated life? How's that treating you? Have you went on a retreat yet? I know the first thing that I ended up doing when we ended up graduating was we ended up going straight to the beach. It's kind of hard to go to the beach in the middle of January, or the middle of February, but oh, that was the first thing that I ended up doing. I don't know about you. Um, but here we go. From an overall trading perspective, let's talk about what's going to end up happening this overall week. Um, yeah, we went to the mountains. Nice. Um, so we end up having doable goods that's going to end up coming out a little bit later on. That's at 13:30. So we're talking about why is my clock off? Da, 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 da. We'll do my filter real quick. Okay, my filter's right. Let's go to my time. Uh, Information. Let's go AM PM. Still give me 24-hour time. Oh, okay. All right, cool. Durable goods is going to end up coming out. We got non-defense capital goods that's going to end up coming out a little bit later on today. Also, we take a look at what's going to end up happening on the last day of February. We're going to end up having GDP that's going to come out for the Swiss franc, and we're going to end up having GDP annualized for the Canadian dollar. So, two things that we have to be able to pay attention to. The market is going to end up wrapping back up. I think that the momentum is going to end up wrapping back up starting on Wednesday. Remember, this upcoming Friday, we're going to end up having non-farm payroll, or I thought we are going to have non-farm payroll. It doesn't look like it's showing up on this chart, but that will be the first Friday of the month. Typically, on the first Friday of the month, we end up having non-farm payroll. I don't see anything yet, but I do expect that we're probably going to end up seeing that overall when it comes down to that. So let's just keep that in mind. Now, obviously, as we go through and take a look at that, we know that today is going to end up being a trader's day, so that means that we're going to end up paying attention to the chart a little bit more than what's going to end up happening with the economic news. We're going to start off with the United States dollar index. As we talked about this before, And I hope you really paid attention to this because we ended up talking about the United States dollar index being in a position to where it was in a transition trade. And that ended up happening about 4 weeks ago. So you've been paying attention since the last 4 weeks, and you end up taking trades from that overall position to be able to get in. You should be in a very good position for long-term trading or position trading overall. I know I talk about this from a swing trade perspective. Obviously, I have my automation systems that trade from a scalping perspective, and we always look at long-term positions as well. But this is basically what ended up happening. The market was in a weekly when the market was in a consolidation. Um, let's see. No, I sent them over to. I think I sent you the information for Discord, and it's in the Discord link. If I did not send that to you, I can send that to you. I can send that to you shortly. Um, let's see. What ended up happening was that the market basically had a support at 12,760 and 12,620. From there, the market ended up falling down to the downside. We've seen that the market was in a major consolidation zone from that overall area for a couple of weeks. Market basically ended up falling all the way down to 12,626, in which we ended up taking profit from when the market actually failed. And then after that, slowly started to be able to pop back up from there. Since then, the market has broken one resistance, went into another resistance, and started to break out and up from there. Remember, we ended up having another trade that was set up from 12,960 all the way up to 13,070, in which that's why I think that the market ultimately is going to end up going right now. The only difference is that the daily's in the sell zone at this particular point. So I would kind of wait to see how far, to see if this market's going to end up having a little bit of a retracement first before trying to actively be able to get back in once again. Once that happens, then after that, we'll have a better idea about how the market's going to end up moving. Remember, when the market's in the daily sell zone, you're talking about 7 to 11 candlesticks, or in this case, 7 to 11 days of overall movement to the downside before being able to make an upside move overall. So I do kind of expect to be able to see something like this. Market kind of fall a little bit, kind of fall up against a past resistance on future support, and then after that, start to push back up a little bit more going into this. But there's really hasn't been the United States dollar has shown that it's ready to be able to push up. The question is, typically right around this time, I'm talking about March, you would end up seeing which currency pair is going to start dominating going into the summer. And the question is it going to be the United States dollar? Or is it going to end up being some other pair? We need to start really kind of focusing in on that because that'll allow us to be able to know what's going to end up allowing us to be able to put ourselves into the best position long term. Um, Typing a wire, yes, if that makes sense. We're looking for long term movement, not necessarily short term movement, because the long term pair that um, ends up giving us a little bit more dominance will allow us to be able to get into those trades and stay in that position or stay in that direction with that trade over time. So we need to figure out what's going to end up being the strongest currency, and we need to be able to start figuring out which currency is going to end up being the weakest because of stuff that's happening over time. We ended up finding out last year that was the Japanese yen, not the weakest one. We ended up finding out the United States dollar was actually the strongest pair. So pairs like US yen, if you end up getting into it in March of last year and kind of rode it out throughout the overall year, then you would end up having a large amount of profit that you could have ran off from. So currently, right now, the question is what's going to end up being the one that's going to end up being weak, which one is going to end up being strong. And I could almost make a case that we could end up saying that the Canadian dollar, once it ends up picking what direction it's going to end up going, it's probably going to end up being either a very weak or a very strong pair. I'm actually kind of leaning towards this market kind of being a little bit more of a stronger pair. And the only reason why I say that is because obviously we look at this market being in consolidation. We look at electric cars actually being able to grow and everything else like that. That may be a factor of why the market is kind of being kind of stagnant. But we can see that this market has been stagnant since November of last year from a weekly perspective, and that's the reason why we haven't taken any trades. But once this market ends up making a decision on what's going to end up happening, if it falls, it's going to fall down to 49. I mean, the 46. 46.96 for the overall downside move overall. The first spot that we end up talking about would probably end up being 63.50 a barrel when it comes down to that movement. But from a daily perspective, there's still no overall movement at all that we can be able to pay attention to. But once it does make a decision on where it's going to end up going, then ultimately, I think it's going to end up staying in that position for the foreseeable future. So we're still kind of out on what's happening with U.S. oil. Unfortunately, there's really no trade to be able to take as of yet. We have GDP annualized that's going to end up coming out tomorrow that we can be able to pay attention to a little bit more. But ultimately, that's really nothing to do off of oil as of yet, unfortunately. Take a look at gold. Gold has a strong correlation with the Japanese yen and the United States dollar. We end up talking about selling on this overall pair at 1874. We said that we're going to end up getting out at 1800 currently right now. If you end up doing that, then you're in a very good position overall to be able to close out on this trade. This trade is getting very close to being able to finish out on this overall movement. We talked about getting into this pair in two different situations. We talked about it one when it actually broke 1874. We got stopped out on the first time. We said re-enter again right around this area if you could, especially after it broke consolidation. Then after that, look at being able to make it fall from there. And so took one loss, but have a major win when it comes down to that position. We end up talking about a counter trend line break that you could be able to get into once this market ended up giving you a little bit more divergence. And that's exactly what ended up happening overall. That was right around 1848. If you missed it in both of those situations, there's really no reason to jump inside of this trade. This trade is pretty much over with. I do expect that we may end up seeing a little bit of an upside move starting this morning, but that probably might be the last time that you may end up seeing something from a push up, and then after that, scalping position to the downside. But if you are in this position and you stayed in this position, great job. Literally, it took about 4 days to be able to finally get this market to be able to move in the direction that we thought it was going to do. Now, it's just being patient and kind of seeing what's going to happen overall. Bitcoin. Bitcoin haven't been paying attention to it, if I'm going to be very honest. Last time we ended up checking on this when we said that it hit 25,000, it had a chance of being able to break. I said that if it did reject 25,000, then it was going to end up pushing to the downside and possibly may fall back inside of consolidation overall. But we said that as soon as it did break 25,000, then we have a solid chance of being able to see that it's going to push back up to 29 very quickly. So currently, this is where we're at this particular point. We've seen that United States dollar was in a position to where we was thinking that it was going to have a little bit of a strong week last week because of where it was from a transition trade standpoint and from a daily perspective. And that's kind of what happened. The market just had a strong retracement overall. Currently, right now, we're in the middle of consolidation. We can see that we have a pseudo uh, morning star when it comes down to candlestick formations, but it's not a true one. The daily's getting back inside of the buy zone, and we're kind of back inside of this consolidation overall. If I'm a person that's looking at being able to buy, I would consider this as a potential move for us being able to get in. Wouldn't hold my breath for us being able to jump in right now, but I would wait for a counter trend line break for that to be able to happen. Once that does happen, then after that, we got a chance of being able to test it. But I don't know. This may be one of those situations to where we may end up getting kind of fooled on this one as well, where the market may end up breaking out of here, push up, try to reject one more time, and then ultimately start to be able to fall down again. But the question would be ultimately how the market going to end up moving. Um, Ultimately, how the market's going to end up moving going into March, and then after that, kind of make a decision from there. Last year around this time, um, last year around this time, the market ended up making a giant push, but that push was actually to the downside. Well, a push was to the upside, got up to right around 65, and then after that, started making this push back down to the downside in April. So March is typically a moving month. The market's going to move in some direction. The question is, what's going to end up happening with that direction before being able to jump in and kind of going from there. US 30, we waited a very long time for this sell trade, but the sell trade finally went through. Typing a Y, yes, if you end up profiting off of the first trade that we end up talking about off of this one, um, we end up saying, well, we want to take the sale right around 33,500 or 33,510. The take profit on the first one was basically in between this gap right here, this little window right there, where we end up closing out right here when it came down to that position. That was at 33,300. That was a quick 200-point move when it came down to that push. And then our second push overall is all the way down to the bottom, which was at 32,530, which is basically the long-term bottom of this consolidation, where we end up feeling like we can see that this market has been in a major consolidation since November of last year. In the positions where the support was right here, and then ultimately once again right here again. So I do expect that the market is going to fall at least one more time. We can see that the market is kind of pushing up from the position that ended up happening last week. Just keep in mind that what may end up happening, and I'm looking at this strictly from a volume perspective. We may end up seeing a block of sellers start to get in right in this area. The reason why I say that is because that's the last lip of the high volume node, or the highest volume peak of this high volume node, right here between this one. I love M patterns. M patterns make it very easy for us to be able to trade. Simply put, because we know what a consolidation is, we know what a gap is going to end up being, and once it breaks this overall gap and breaks this overall point, now you got a second trade that you can be able to take advantage of. Right now, we're just waiting on that second trade to be able to take advantage of, especially if this market ends up getting up here and then rejecting back off of this overall spot to the downside. So if you're in it, you should already have one profit. You should be deep in profit on another. Obviously, move your stop loss to break even. And currently, right now, if you're not in it or you're looking to be able to add on to another position, I would say pay attention to what's going to end up happening right around that 33,100 area, a little bit up towards there. See if the market's going to end up breaking a rejection, or see if the market's going to end up rejecting off of that area, and then after look at being able to sell. Um, some I'm interested in, something I like, but we gotta obviously be patient on how that market kind of moves off this position. But once again, looking for a counter trend line break for this market to be able to move. I'm gonna add a trend line alert. Looking for it to cross down. Trend line will say U.S. kind of trend line break sell. We want it once per bar close to be sure, and then after that, create it from there. There we go. Matter of fact, I would like that off the 15 minute. I would not like that off the. I'd rather get it off the 15 minute. Okay, so there we go. Oh, excuse me. Okay, good. So I'm going to keep that up. We'll see how that kind of reacts, and then we kind of go from there. Last one today. We'll go through Nas 100, unless there's a pair that somebody would like to be able to talk about that is watching online. Um, take a look at what's happening with Nas. Last time we looked at Nas 100, there was a great trading opportunity that we ended up taking. And since then, markets being kind of slow. Um, we got the movement that we wanted. It's just that just looking for another opportunity. Okay, so let's talk about what we're looking at. First thing was this: market was in consolidation um, from the end of January all the way basically until the end of March. The market ended up breaking on 220. We ended up saying once the market ended up breaking below 12,420, I would say that we wanted to be able to get out right around 12,100. The market ended up having that strong push to the downside, gave us another counter trend line break to be able to get in, and a second one to be able to get in off of that one. If you did not listen to those three, then quite frankly, you end up missing out on that trade. So with a 300-point move that we end up taking advantage of, if you end up doing that, congratulations. Thanks for being patient on that overall trade. Now the question is, okay, what's happening now? We can look and see that if we go back and start looking to the left, we're basically at a previous consolidation that ended up happening from November 9th all the way until December 21st, which was our last couple of days of trading in 2022. Now, keep in mind that the rule always applies and it stays the same. If the market ends up breaking a support, it will end up falling down to another support. It does not surprise me, or will not surprise me, if this market continues to fall, that it will fall down to at least right here, which will be 11,420 in the overall area where the market broke the counter trend line break to start pushing and moving. Okay. Now, halfway point off of this one is at 11,750. Some people like being able to take profit off of those overall positions, but there's a couple things that's happening in this. One, we have our consolidation, then after that we have our push. The market ended up being trending, so we start seeing counter trend line breaks to the upside. We're seeing the same thing happen to the downside on this overall movement, which is just being basically counter trend line breaks going back to the opposite direction, going to the downside. We talked about how we looked at US 30 as a position of where if it ended up hitting the top of a high volume node, we'll be interested in being able to sell. I'm seeing the same thing on this overall position as well, where we're basically at the top of resistance or at a top peak of this overall movement, at least from a small nature. If this market ends up getting here and then rejects off of everything to the downside, then I'll be interested in being able to sell this one as well. Now, what does that mean? That means to me if the market is falling down, that means that the United States dollar is going to get stronger. Okay, United States dollar gets stronger. The value of Nasdaq, Dow, and everything else typically goes down, which means that you're going to see gold go down as well when it comes down to overall trading. Okay, strong correlations. Correlations typically work when it comes down to this movement. Look at the counter trend line break to sell. Wait for this thing to have a full bar close off of 15-minute. Wouldn't surprise me if that happens overall. Okay, would not surprise me one bit if that happens overall if the market ends up breaking to the downside off of this one. Now the question is, where will it go? If it does break to the downside, um, first position that I would end up paying attention to obviously would be the midpoint. Would be the midpoint of this. Yeah, would be the midpoint of the consolidation, which would be at 11,730. Currently, right now, it's about 400 points away. If you're going to do that, I'll place my stop loss. If we're being very conservative about this, I'll place my stop loss above this overall area. Um, or you can place it above this overall peak right here. The question is, what is that going to look like from a risk reward standpoint? Say counter trend line break happens somewhere up here. Target one would be right there. We'll put our stop loss right here. We're talking about a 1 to 2.3. You put a stop loss right there. Put a 1 to 1.5. I go with the 1 to 2.3. But that's assuming obviously we end up getting a strong counter trend line break to the downside. We can be able to go after and be able to go from there. This one is not set in. This one's not fully locked in yet, but I will pay attention to this one. I'll place this out. I'll place this out on the idea page of TradingView as well. If you like what I end up doing, please make sure that you end up clicking on the boost button for TradingView. Obviously, if you like it, please make sure you click on the like button for YouTube. Make sure that you end up sharing and subscribing. Obviously, as we are going through and getting everything else done, we're 40 people away from being able to hit 1K on TradingView, which is something that would be very cool, especially if people that end up knowing what has been happening with TradingView with me. But it'd be very cool to be able to hit that number overall. But like always, make sure that you end up planning your trade. Trade your plan. I see each and every one of y'all in the next video. I see y'all tomorrow morning. Hopefully, our ideas come into fruition. Hopefully, everybody can be able to cash out on the trades that we end up talking about a little bit early on. Everybody, take it easy.